Well, thanks for joining us. Let's take a look at our grain market activity as it stacks up right now. And in the corn market, last time we checked, we were up, about 3 cents or so. And let's see if we're hanging on to those gains. Right now in Chicago on the big board, hey, we're 3 3/4 higher at 391.5. So we're within 2 ticks of our high of the day. The nearbys are showing the most strength, so that could be significant. Keep an eye on that. Now, if you look at the soybean trade, we have had consistent gains of about 4 cents on the nearby contracts. We have January up 4, we have March up 4 1/4. Now we're showing a trade of 9.59 3/4. And in Chicago wheat, we're actually a couple of pennies higher there too, with March at 5.60 3/4. And we have Brian Hoops on the line, the president of Midwest Market Solutions. He's in Springfield, Missouri. By the way, I wanted to ask you, Brian, did you get in on this new storm system that's developing around the Delta region there, or is it too far east of you?
It's not hitting us so far. We had a really nice day yesterday, pretty warm temperatures again today, but so far no storms.
Okay, now on the grain side here, we were wondering if the market would show any signal, any sense of direction ahead of next week's WASDE report. It'll be supposedly our final crop production report, even though we pretty much all know that can't totally be true. And then, of course, we have that big phase 1 signing on the 15th. So does the trade kind of have that attitude now that they need to buy into these big events coming up here? Because from what I heard, the big commodity funds were net short everything except for the wheat and the live cattle, I believe.
Yeah, they're building a nice long position in the wheat, and the question will be, is that going to be sustainable? Can they continue to make money on the long side in wheat without strong demand trends or real strong fundamentals? They're kind of betting on acreage dropping in that January 10th report to the lowest levels in over 100 years. And for corn and soybeans, there's a lot of optimism here about China and that they're going to step in and buy now that we have a trade agreement. And that's exactly, how we should feel, is that we should feel, that China has made an agreement to purchase soybeans and corn and U.S. ag products about $40 billion each year. Question, I think, will be, a lot of the trade will have to answer is, what is the timing of this? How quickly will they be buying purchases? And to what extent are they going to buy corn or soybeans? And really, we may never get those answers. But until the agreement is signed, we won't really have any idea. As we go into this marketing year, producers really need to focus on what direction they want to take for their marketing for this upcoming year. We could be 3 to 4 weeks away from record crop of soybeans in South America, as well as corn. That could undercut our prices as far as our export opportunities. Plus, we go into March, April, May, when we start our planting season across the United States. We're going to be planting a lot more corn, a lot more soybeans than what we did last year, and that could cap our prices as well. So as we see rallies grow and mature here, the March soybeans have a lot of resistance up around 9.67. That's another 7-8 cents away from where they're currently trading. That's a major resistance point on weekly charts. Great time to offset some of that risk and make some cash sales, especially as basis levels narrow.
All right, I want to take a quick peek at our energy market too. Let's take a look at our crude oil market. This would be West Texas Intermediate crude. And on that particular market, we're actually down by 16 cents. We're at $60.90 per barrel. That would be on the nearby February contract. And we have the March down 9 cents right now. In the heating oil trade, it's kind of a mixed affair so far today. We have the nearby February basically unchanged. And we have the March maybe up 1/10 of a penny or so at 217.3, or excuse me, 201.8 per gallon. So we'll pause right there. And Brian, we'll come back. I want to visit with you about this currency evaluation right now and its possible impact on the ag trade. We'll talk livestock when we come back. We are talking with Brian Hoops of Midwest Market Solutions. Brian, right before the break, I alluded to the currency markets. And I was noticing where the Dow Jones Industrial Average, for one thing, is about 200 points higher today. Quite a start to the new year on the equity markets there. But I noticed where the dollar has had a sharp rally today, too. Now, it's interesting that we can actually get the grains to go upward. Usually that's almost like a poison pill anytime you have a sharply higher U.S. dollar, and it's hard to get the grains to rally in the face of that. But they are doing it today. How does that work?
Yeah, good. Yeah, that's great. Exactly right. We've seen a dollar rally here off of some of its lows that it made going into the end of the year. Usually, we work opposite the effect of the dollar with the grain trade, but we are seeing some buying interest in here now. The wheat market has faded from its highs. We're 7 to 10 cents off the highs as the dollar has rallied. That seems to affect the wheat market the most compared to corn and soybeans. Corn and beans are holding in there as far as their daily gains so far, but that U.S. dollar index with that market climbing, that is definitely going to be negative for our exports if it continues to remain strong.
Is it a problem on our livestock trade? Because it's really been struggling today on the cattle.
Yeah, it has. It's interesting. The cattle futures fell to triple-digit losses in mid-morning, and at that point in time, that's when the Packer bids started to surface. We heard some bids in the northern Nebraska regions, 195 to 196, and now we're hearing some 122 bids starting to creep in as well in the Southern Plains. So, that's down from last week's trade just slightly. So I think we're looking at least a steady type money for Packer inquiry. Asking prices probably 125 and 200. That would represent some strong cash trade if we can get that to develop, but the futures market coming off of its lows on that renewed Packer interest.
All right, so we have live cattle, and let's bring that back up again if we can on the futures. For live cattle, we have the February down 58, and we have the April contract $1.13 lower now at 126.05. On the feeder cattle trade, we've had most contracts over $2 lower, but it's starting to come off of that now, at least on the deferreds. And we have the January down 205, March also down 205. We have April now down $1.82. And if you look at the lean hog trade, well, it's been trying to claw its way back higher today. We have February now 85 higher at 72.28 after having a low of 70.78. That means we rallied $1.50 off of that now. And we're back within about 30 or 35 cents of our high of the day. April lean hogs up 65 at 78.58. And the May contract 53 higher at 84.58. So there is that. And then, Brian, I wanted to remind everybody about the cutouts that just came out back at the top of the hour there. We had the beef cutouts today that were mixed. They were sharply lower on Tuesday, but today they kind of evened out a little bit on the select cuts. Selects were up 64 cents today. Choice were down 34 cents. And the wholesale pork trade kind of evened out today, too. It was lower Tuesday, but if we look at our pork cutouts today, the carcass values actually firmed up. Let's see if we can bring them up on the screen here. There they are. Carcass values up $1.71. Loins up $2.49. Bellies were $4.36 higher today. So there is what the wholesale market is doing. Brian, thanks for the time. Appreciate it, sir, as we kick off 2020. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. So, Tammy, that's the latest. Things starting to firm up in livestock a little bit.
Yeah, all right. I got to get used to saying 2020.
Yeah.
All right.